Kim, thanks very much for joining us on Zoom. Just for those who don't know, just give us a little bit in terms of Fidelity, but also your role there.
So Fidelity, big private asset manager. We cover all asset classes, and the coverage across the business is across Asia, Europe and Canada, but excludes the USA. So it's a global business, and certainly from an equities and fixed income perspective, it is a global business. From a real estate perspective, we only have direct real estate investment in Europe and the UK, and we have exposure to the UK and what we call core Eurozone, which is France, Germany, Benelux. And my role is head of real estate research and quants, and risk sometimes as well, depending on which title I'm putting on the business card at the moment. But yeah, sort of basically supporting the direct business.
And we're in obviously a very almost unique position, certainly as I remember it, in terms of the crisis around the coronavirus. How are you seeing that from a research point of view? And also, I suppose, given that Fidelity is across a series of different assets, not just real assets and real estate, are there things that you're sort of picking up from the rest of the business that might be influencing what's happening in the real estate property arm?
As a head of research, obviously a lot of people are coming to us to think through what the implications, particularly of taking some of the economic expectations and running that through to what that means for real estate performance. And it's hard because there's nothing like this. You know, you can't just go, oh, well, it's definitely like the 2008-9 recession, because it's not actually a financial crisis, but there are elements of liquidity issues that we're seeing across the globe that make you start to think, well, there are going to be a few of those issues. But it's also a bit like, if you want to go all the way back to 1992, it's a bit like one of those big supply and demand, classic supply and demand recessions as well, because we have both the supply disruption that came through from China at the beginning of this crisis, and now the huge demand disruption that we're seeing across Europe and North America. So there are elements of that we can learn from. There are elements of the financial crisis we can learn from. But the reality is none of us have ever worked through something that's been such a complete shutdown of an economy for hopefully what's going to be a relatively short period of time, but still an enormously disruptive element. So at Fidelity, we're definitely trying to really leverage off working with our colleagues, particularly in Asia, who are a good 6 weeks ahead of us in all of this, and also trying to leverage off what we're seeing in fixed income markets, in equity markets, because obviously they're responding much more quickly than direct real estate can to this crisis. So I'm regularly joining calls with the equity analysts, with the fixed income analysts across different sectors, just to see what they're seeing in the market and understand how we might take some of those lessons learned into thinking about what that means for European real estate.
And I know this is obviously, we're in the midst of it in Europe, especially. In terms of the timing, do you see it following a line like Asia?
I think we can learn quite a bit from the Asia trajectory. I think what we do have to recognise is that each government and each country has tackled it a little bit differently. So you have to be careful of sort of drawing one-to-one parallels. But I think it is interesting, certainly watching how Chinese businesses are trying to get back up and running in terms of the pace at which they've been able to do it, some of the issues that they're now hitting. I think we have to also be aware that, places like South Korea are another very good example, but they've tackled it again in a different way. Perhaps there's more parallels between South Korea and Germany, with a real focus on testing and isolating. So I think that you'll see a very different pattern of business recovery there as well. So yes, I think there are lessons to be learned, and certainly we can start to draw parallels, but we do have to be careful that the way that the different governments have been implementing this has resulted in different patterns coming out of it as well.
Great. Thanks very much, as ever, for sharing your insights with us today, Kim. Thank you.
My pleasure.